Breaking, Musk turns on Trump tariffs, supports Canada, amid White House turmoil. What if the world's most powerful tech billionaire just publicly challenged the White House and sided with Canada in a high-stakes tariff battle? Moments ago, Elon Musk appeared to break ranks on Trump's trade strategy, sending shockwaves through Washington and Wall Street. Is this the start of a corporate revolt or a major crack inside the administration's economic plan? Stay with me, because what happens next could reshape U.S.-Canada trade overnight. The controversy centers on renewed tariff threats targeting Canadian imports, part of a broader trade push designed to pressure key partners on manufacturing, energy, and cross-border supply chains. Supporters of the tariff approach argue it strengthens domestic industry and protects American jobs. Critics warn it risks retaliation, supply disruptions, and rising costs for businesses and consumers. Into that debate stepped Elon Musk. In remarks that quickly circulated across financial media and social platforms, Musk indicated that escalating tariffs on Canada could create unintended consequences for North American manufacturing, particularly in sectors deeply integrated across borders. For companies operating in automotive production, energy infrastructure, battery supply chains, and advanced materials, the U.S. and Canada function less like separate economies and more like a single interconnected industrial ecosystem. That is what makes this moment so explosive. Musk's business empire spans electric vehicles, energy storage, artificial intelligence, aerospace technology, and critical mineral sourcing. Many of those sectors rely on cross-border components, raw materials, and logistical coordination. Canada plays a significant role in supplying lithium, nickel, aluminum, and energy inputs, all crucial to advanced manufacturing. A tariff escalation could ripple directly into production costs. While Musk did not frame his comments as partisan, the timing has amplified the political impact. The White House is already navigating internal debate over how aggressively to pursue trade leverage. Some advisors favor a hardline stance, arguing tariffs provide negotiating strength. Others caution that escalating tensions with close allies could destabilize markets and strain diplomatic ties. By signaling alignment with Canada's position, or at least caution against tariff escalation, Musk has inserted himself squarely into that internal tug-of-war. Financial markets responded almost immediately. Shares of companies exposed to cross-border supply chains showed volatility as investors tried to assess whether policy friction might intensify. Currency traders monitored the U.S. dollar and Canadian dollar for signs of stress. Analysts debated whether Musk's public stance could influence investor confidence or corporate lobbying efforts. But this story goes beyond stock tickers. The relationship between major corporate leaders and political administrations is often delicate. CEOs may privately advocate for policies that benefit their industries, but public divergence from a sitting administration carries risk. It can shift regulatory dynamics, alter negotiation channels, and reshape public perception. Musk's influence makes this different. He is not simply a business executive. He commands global attention. When he comments on economic policy, headlines follow. That visibility can amplify pressure on policymakers, particularly if markets begin interpreting corporate resistance as a sign of economic vulnerability. Inside Washington, reactions have reportedly been mixed. Some officials downplayed the significance, suggesting policy decisions are driven by national interest, not individual executives. Others privately acknowledged that business community concerns, especially from large employers, can shape how aggressively tariffs are implemented. Meanwhile, Canadian officials welcomed signs of corporate alignment. For Canada, the stakes are substantial. The U.S. is its largest trading partner, and tariff escalation could impact energy exports, manufacturing hubs, and employment across multiple provinces. Support from influential American business leaders strengthens Canada's negotiating position. Critics of the tariff strategy argue that North American competitiveness depends on integration, not fragmentation. Supply chains built over decades allow companies to optimize costs, efficiency, and innovation. Disrupting that integration could slow investment at a time when global competition is intensifying. Supporters of the tariff approach counter that short-term disruption can produce long-term gains by encouraging domestic production and reducing dependency. They frame the strategy as leverage, a means to secure better trade terms. Musk's comments appear rooted in pragmatism. His companies operate in capital-intensive industries where margins depend on scale and coordination. Sudden cost shifts tied to tariffs could alter production timelines and pricing structures. Investors are keenly aware of that exposure. There is also a broader geopolitical layer. Global trade is increasingly intertwined with national security concerns, supply chain resilience, and technological leadership. Tariffs are not merely economic tools. They are signals of strategic posture. When a figure like Musk publicly questions that posture, it sparks debate about whether economic strength is better achieved through protection or partnership. The White House has not issued a direct response to Musk's remarks, but insiders suggest discussions are ongoing. Trade policy often evolves through negotiation phases. Public rhetoric can be forceful while behind-the-scenes talks aim for compromise. What happens next may depend on whether this episode escalates or stabilizes. If more corporate leaders echo Musk's concerns, pressure could mount for a recalibrated approach. If the administration doubles down, tensions between industry and policymakers could intensify. Investors are watching carefully. Trade disputes have historically triggered market swings, particularly when they involve close allies. However, markets also adapt quickly once clarity emerges. The immediate volatility reflects uncertainty, not necessarily long-term damage. For everyday consumers, the issue may feel abstract, but tariffs can influence prices on vehicles, energy products, electronics, and construction materials. Integrated supply chains mean costs rarely stay isolated within one sector. Political analysts note that public disagreements between high-profile CEOs and administrations often become symbolic flashpoints. They shape narratives about economic direction and leadership philosophy. Musk's stance could resonate with voters who prioritize economic stability and cross-border cooperation, or with those who see corporate influence as overreach. At its core, this story reflects a broader tension shaping modern economic policy. How to balance national leverage with global integration. The U.S. and Canada share one of the world's most interconnected trade relationships. Altering that relationship carries consequences that extend beyond a single headline. For Musk, the decision to speak carries strategic calculation. Transparency can reassure investors about supply chain planning. Silence, in contrast, might leave markets guessing. By articulating concern, he positions himself as an advocate for industrial continuity. As the hours unfold, traders, policymakers, and corporate boards will interpret signals from both Washington and Ottawa. Will negotiations cool tensions? Will rhetoric intensify? Or will this become another chapter in an ongoing recalibration of global trade dynamics? One thing is clear. When a technology titan steps into a tariff debate, the conversation changes. The intersection of politics, markets, and innovation creates a volatile mix. Today's headlines may fade, but the structural questions about trade strategy will persist. For now, volatility reflects uncertainty, not collapse. Institutions remain intact. Dialogue continues. But the optics of Musk appearing to turn against a central tariff strategy underscore how fragile economic consensus can be. The coming days will reveal whether this moment marks a temporary disagreement or a deeper shift in alignment between business leadership and political power. Markets will adjust. Negotiators will strategize. And the world will watch as one of the most influential CEOs in modern history challenges the direction of trade policy at a critical moment.